At the conclusion of its June meeting, the Federal Reserve did the thing that had spooked markets the most over the past few weeks. But instead of tumbling, stocks actually went up. On Wednesday, the Federal Reserve lifted interest rates by 75 basis points, or 0.75%. That is the steepest rate hike that the Fed has done since 1994, when I was a preteen who was watching My So-Called Life and listening to Courtney Love. So why did the Fed do it? You may remember the week before the Fed's meeting, inflation came in way hotter than expected at 8.6%. The market had been hoping that inflation was showing signs of cooling off. Instead, it got much hotter. And even though the market expected it to be cooling off, none of us should have been surprised by that, because anytime you go to the grocery store, anytime you buy gas, even trying to book your summer vacation, it is so clear that prices are going up everywhere. And the Fed really only has one way to tamp down on this inflation, and that is through raising interest rates. Now, ahead of that inflation data, the market was expecting that the Fed would lift rates by 50 basis points, or half a percentage. But the Fed now is really feeling that it is under pressure to get ahead of inflation as much as it can, since it's been on its back heel for the last few months. But why didn't the market crash when the Fed lifted rates? Well, the fear of the 75 basis point hike was being rumored in the market days ahead of the Fed's meeting. And the thing to remember is that the market is generally forward-looking. Once there's a rumor out there, people tend to position their portfolios to get ahead of it. So when the news actually happens, people are well positioned. The other thing that happened, though, was Fed Chair Jerome Powell said that he saw this rate hike as an unusual one. Now, it is possible that the Fed will have to do another 75 basis point hike, but Jerome Powell signaled that he did not expect those hikes to be common. At the conclusion of the Fed's meeting, investors were generally optimistic that the Fed would be able to engineer a so-called soft landing. To cool down the economy, the Fed does have to lift interest rates, but people are worried that the Fed is going to do it too quickly and force the economy into a deep recession. What investors heard on Wednesday was that the Fed is going to have to make some bold moves, but it does not expect that it's going to have to continue doing them. So for now, investors are feeling optimistic. Of course, we'll be watching as more economic data comes through. So now that you've had time to dissect the June Fed meeting, do you think the Fed is going to be able to engineer a soft landing? Let us know in the comments below.